If you're over 62 and thinking about buying a home, your financing options are very different than they were earlier in life. Some can save you money, some can increase your buying power, and others can completely change your retirement strategy. Today, this video will break down everything in simple, practical terms so that you can choose what truly fits your next chapter. Hey, I'm Julie Sabby with Vikings Homes, brokered by eXp Realty. I specialize in helping homeowners over 62 downsize, right-size, and transition into homes that support a simpler, more comfortable lifestyle. This is your full guide to the main financing options available after 62 and who each one is really for. Conventional mortgages are still available and often a great choice. Here's what you need to know. Age does not affect approval. Your credit score and debt-to-income ratio matter most. Retirement income counts, including Social Security, pensions, and withdrawals from retirement accounts when they're documented properly. You can choose a 30-year, a 20-year, or a 15-year mortgage. Rates are based on your credit, down payment, and loan size. This is the most straightforward option for many people, especially if you have solid credit, steady retirement income, and you're comfortable with a monthly payment. FHA loans offer more flexibility, especially if your credit score is lower. You want a smaller down payment. You'd benefit from easier qualification guidelines. These loans are available to buyers over 62 and sometimes give you more purchasing power with less money down. FHA can be a great fit if you're rebuilding credit or want to preserve more of your cash while still keeping a manageable payment. If you served in the military or are the surviving spouse of someone who did, a VA loan is one of the best financing options available. The benefits of a VA loan include no down payment for many buyers, no monthly mortgage insurance, also called PMI, often lower interest rates and more flexible guidelines. If you qualify, this is often the strongest choice because it allows you to keep more of your savings intact while still getting a very competitive monthly payment. If most of your financial strength is in retirement accounts or investments, rather than a large monthly paycheck, you may benefit from the lender taking your eligible assets and dividing them over a set number of months to create a qualifying income amount. This can help you qualify even if your actual withdrawals are modest, as long as your asset balances are strong. These use the deposits flowing into your bank accounts instead of traditional pay stubs or W-2s. They can still be useful if you have consulting part-time, seasonal, or rental income that doesn't show up neatly on a tax return. These options are ideal for people with strong assets but lower reportable monthly income. They usually come with different costs and guidelines. So there's something to explore carefully with a knowledgeable lender. If you found the perfect home but haven't sold your current one yet, a bridge loan can help you buy the first one and move once instead of selling first and feeling rushed. A bridge loan is a short-term financing that uses the equity in your current home to help fund the purchase of your next one. It can give you the flexibility with timing, but it often has a higher cost and must fit into a clear plan to sell or refinance. So it's important to understand the timeline before you commit. A reverse mortgage for purchase can be a powerful tool for the right person. It allows you to buy a home with no required monthly mortgage payment. Use equity from your current home as part of the purchase. Keep more of your cash available for retirement, travel, healthcare, or emergencies. You must be 62 or older, live in the home as your primary residence, and you're still responsible for the property taxes, homeowner insurance, and upkeep. This option could be especially helpful if you want a one-level living, lower maintenance, and more predictable cash flow in retirement. It's not right for everyone, but when it fits, it can completely change how your retirement budget feels. You may also choose to buy using cash from the sale of your current home. withdrawals from retirement accounts, liquidating some investments. Paying cash can offer peace of mind, no mortgage, no payment, and often a stronger negotiating position. The trade-off is how that affects your long-term income, taxes, and legacy plans. Before making a large withdrawal or liquidation, it's always wise to talk with a financial advisor so your home purchase can support bigger retirement and estate goals. Here's a simple way to organize all of this in your mind. Traditional loans like conventional, FHA, and VA work best if you're comfortable with a monthly payment and want to continue building or preserving equity. Asset-based and bank statement loans are designed for people whose balance sheet looks stronger than their monthly pay stub. Reverse mortgage purchases and paying cash focus more on cash flow and lifestyle planning, how you want your money and housing costs to feel in retirement. Every financing option has different benefits depending on your lifestyle, health, retirement income, savings, and how long you plan to stay in the home. If you're over 62 and planning a move, let's schedule a relaxed discovery call where we can clarify your goals and timeline, narrow down which 2 or 3 financing paths fit you best, create a next step plan so you know exactly what to do. You can reach me at 763-257-7231 or send me an email, julie@vikingshomes.com. Like, subscribe for more videos in this After 62 series, and let me know in the comments what questions you want me to cover next. Taxes, legacy planning, or navigating decisions with the adult children.